Well, as you know, I started a new way a few months ago after leaving GAFI, and actually what I'm doing now is creating a platform for investors to invest in office projects in Romania. You probably know some rumors regarding the details, but I will not say it in this forum. I'm excited. It's a very interesting time, and I hope for the best.
Super,
Anna. Good morning, everyone. Thanks for being here. I'm unlike David. I'm back on my old way. Let's put it this way. But I'm very happy. Well, you never say never. You. And I'm very happy, and it's okay. It's nice. It's challenging. So I think there will be a lot of challenges this year for every one of us in all the industry segments. So we're looking forward to it.
Great, Klaus.
Good morning to everybody. My name is Klaus Bleckenwegner. I'm representing a construction company, actually at the moment one of the biggest in Romania in all matters of construction, from big infrastructure up to residential buildings. What we are doing is what we are doing also in entire Europe and all over the world. We are active in 30 countries, traditionally in Eastern Europe, from Poland to Bulgaria. Romania is a very important and big market for us. Meanwhile, we are present over 15 years. Me personally, 10 years. I can say I lost my childhood in Romania, more in the matters of infrastructure, but since several years we are heavily active also in building construction. And yes, for us also PPP is a part of our portfolio. And if Romania moves forward in this way, like we started, probably we would enter also in such a story. Some homework has to be done. Very nice to see you, and let's have a great discussion.
Hello everyone, my name is Sergey Koynov, and I'm representing Lions Head. My personal career is about 10-12 years in real estate. I was managing one of the big brokerage companies in Bulgaria for 6 years. Then I was responsible for the development of an office building. And now I come as a representative, as a co-CEO of the management company of Lions Head Investments. We now have 3 buildings. One of them is acquired here in Bucharest, a wonderful building developed by Portland Trust, and also 2 relatively big buildings in Bulgaria. We are looking into Southeast Europe, looking for income office buildings. So this is where we are. We're looking for more opportunities, looking at the interesting market of Bucharest, and it's my pleasure to be here and to be part of this panel as well.
Great.
Laurentiu, good morning. I'll try to be short. First, I have 12 years experience in real estate. I started as a valuator, then I joined the investment team, and now I got luck to actually run Colliers, and it was just 1 year ago when I started. Previously, I worked in Vodafone, Connex Vodafone, for 10 years, so I having experience in customer service and marketing. We at Colliers, we would like to help you all as much as we can. We are here for the long run. We celebrated 22 years, actually will be 23 years this year. So, and we would like to shape the market, the real estate market, but also generally the Romanian market, as ethical, as educational, if I may say, as good as we can in order to improve actually Romania.
Great, Dimitris.
Good morning, everyone. I'm Dimitris Raptis. I'm Deputy CEO and CIO of Globalworth. Globalworth is today the largest office investor and developer in the broader CEE region. We focus on 2 markets. We started from Romania back in 2013, expanded about 14 months ago in Poland, where we acquired a number of assets very, very quickly. So now we own a portfolio of about 2.5 billion euros across these two markets. I think I'll leave it at that, and looking forward to a very interesting discussion.
Great, Lavinia.
Good morning, everybody. First of all, Richard, Francesco, I would like to thank you for bringing this event to Romania. It means a lot for us. So my name is Lavinia Rasmussen. I am specialized in real estate and a member of real estate of NNDKP team as of 2005. As many of you know, NNDKP is one of the oldest and largest legal outfits in Romania. Covering all practice areas, we have 120 lawyers, and we have a large, not only legal division, but also tax division. Thank you very much, and we look forward to this panel.
Great. So I'm going to be sharing some of the questions here with David, but David doesn't get away with it because I'll also ask him some questions as well. And you can ask me questions. Everybody can ask everybody questions. But let's start maybe with you, Roger. So we've had a little bit about the fundamentals. How do you see at the moment the economy, I suppose, in the region, and how do you see that influencing Romania especially?
So we just, as Mihai was saying, we are just launching next week our market report, and we've made several analyses there. And we were comparing what is happening from the GDP point of view, growth point of view in Romania and in the whole region. And we found out that in the last 19 years, so it's close to 2 decades, the whole region grew with a pace of about 3.4% per year. Romania and Slovakia grew with about 4% in the last 19 years per year. So, and the average on the European level, it's 1.2%. So we do believe that it's a lot of potential in this region. It is issue right now from the point of view of the labor force, but we saw a lot of Ukrainians coming to Poland, for example. So, and also we shall see, that's a broader subject, maybe we will touch, but what will happen with Brexit, because we have, for example, 400,000 Romanians in UK. Coming back a bit, I do believe that the potential in the region and going to Romania, it is such a juicy gap between our products and the ones in other countries, even in CEE. I just want to mention one thing. In Romania, and I'll stop with that, in Romania, we are still, with respect to the yields level, above the booming period. It is the case just in Romania and in Poland, and in Bulgaria. If we compare 5.6, the record yield in 2007 with 7.25 right now, all the other countries except Romania and Bulgaria in the region are below that level. So the competitiveness of Romanian products, it is very good. And I do believe that after 5 years of about 951 billion in investments, we will have a better year, this one.
Okay, good.
I have a question to Laurentiu and to the panel. How do you see the influence of the new legislation of the government and the instability on investors coming to Romania?
The whole changes which happened and the pace we have from the administrative point of view should be better by far. In the same time, we were looking on how the the private sector has evolved in the last years and how things evolved in Poland, in Hungary, in Czech Republic, because are not in the best shape also from this point of view. So it is an issue right now with the rule of law between east part and west part. And what has happened, for example, in Hungary? We had 1.7, almost 1.8 billion investments last year. 1 year ago, 2017, the same place. Poland, 7.2 billion last year, record year for them, 40% of the overall inflow of capital in CEE. So I do believe that private sector will find its way. In the same time, yes, if we are helped with good predictability, that will help even attract more investments in Romania.
And David, just in terms of how you're seeing the region in comparison, because obviously you're talking to a lot of investors who will be looking at Romania and the region, but also as part of a strategy for Pan-Europe. Do you see there being an increasing difference between views on Western Europe, Eastern Europe, and Romania in particular?
First of all, I don't know if it's right or wrong, but you see a difference because you don't see here the real institutional investors that you have, let's say, in Poland or even in Hungary. You don't see them here. You don't see the Germans. None of them is here, the real institutional. So we still have a way to go. But you know, each market has its ups and downs. I think Romania has a great potential. Poland, we were just talking about this a few minutes ago with Dimitris. Poland, if you looked at Poland a few years ago, everybody was talking, there is a big supply of offices, rents will decrease, you know, and nothing happened. Poland is growing. Brexit helped it, of course, but still it's growing. And Dimitris even said that there might be increase in rent. So I think you are more equipped to discuss this.
And Dimitris, in terms of let's look a little bit about the economic fundamentals. You're focused across Eastern Europe, but have built up a big portfolio in Poland, especially. How do you see the differences between the markets when you're looking across the region? And I suppose, how do you see them in comparison in terms of potential for rent rises, growth, those kinds of things?
Yeah, although we have a mandate to invest, of course, across the region, but we focus only on two markets, which is Poland and Romania. This is because of size, liquidity, as well as economic fundamentals. But in general, I think the markets across the region, they do share certain similar characteristics in terms of obviously low wages, although they have been rising, of course, recently, but they're still very low compared to Western Europe, stable and low tax environment, young and very well educated workforce, etc., etc. Having said that, there are certain differences between the different markets, and just to compare the two markets that we are active in, Poland and Romania. I think the main difference is the way the two countries have taken advantage of the use of EU structural funds and subsidies in terms of investments in infrastructure. I mean, Poland has done a phenomenal job in this respect. Romania, unfortunately, is lagging a bit further behind. Workforce, although as we discussed before, there are strains in all the markets in this region because of this phenomenal demand from multinationals and financial institutions. Again, Poland fares a little bit better because of as Laura said, of immigration from Ukraine. You also see over the last 12 to 18 months, Poles returning from the UK and other markets back to Poland. We hope to see that in Romania too. But overall, to compare the, let's say, East and West, for sure, this region will continue to fare much better in terms of economic growth. So it's a very good, let's say, place, a very good bet for all investors.
Okay, good. I'm going to pick up a question that's come in from the audience, so thank you for that. Which is, and I'll come to you first, but it's for Sergey and David, which is secondary cities like Timisoara. How do you see those in terms of your investment vision? And I think that's good then to pick up anybody else's view on particularly that topic of secondary cities, because a lot of the time international investors are looking primarily at capital cities. So what's the view from here about secondary cities? Let's pick that up with you first, Sergey.
It's a good question. I mean, basically we started with this, that, I mean, although, again, depending on how you compare Romania to the region, I really see that the whole comparison is with Poland because it's bigger, because it's better, because it's the yields are lower and the opportunities are bigger. But to be fair, basically there needs to be an objective comparison to the other markets, and basically Romania is faring really well to many of the other countries that are neighboring Romania. So from that point of view, in Romania you have many more investors, although not the institutional ones, although not the Germans, but still a lot more interest and a lot more liquidity that is available on the market. Obviously, the liquidity is mostly available in Bucharest. It's much more difficult, basically, to have a liquid asset in the secondary cities. In Romania, the secondary cities are very active, have really good universities, and there is a lot of potential there. We see some really good buildings, and maybe as in Poland, the secondary cities in Romania are active. Some are calling them regional cities because secondary is not so good, and I agree with this. So basically the regional cities are doing really well, but still on the liquidity front, it's not the same. So we, as a newcomer, let's say, would really focus first on the Bucharest assets, and for us, this is a primary goal. But we also see that in the regional cities, there are some really great projects happening, and I'm sure that there is opportunity there as well, but it's just not for us at this stage.
Okay, good. And Anna, maybe coming to you, obviously, CTP, very active in the logistics side and across the region. You've got a different investment criteria, I guess, when you're looking at cities generally, because you're looking at it from a logistics point of view. So how do you see Romania within, particularly within the context of the other areas that the group is active in?
Well, Romania is the second focus of CTP after Czech Republic. Czech Republic is where the company has its headquarters. We are at 5 million square meters at the group level, and 1 million of those are in Romania. So it's the second largest country for CTP, which says a lot about that. We, of course, have a totally different view, and I was just thinking now that I've been visiting Cluj and Timisoara and Arad and Sibiu, we're everywhere, Turda and so on. So we're obviously in logistics, we're more connected to the infrastructure than other things, and we're thinking a little bit differently. We are also not so sad of not having the institutional investors yet here, because the group is committed to invest and develop and still expand its business here locally, and to seize the opportunities that are still on. So for us, it's absolutely different angle, because we've seen the western part of the country growing, and if you look at the light industrial and logistics developments in Romania, if you look at the map, you will see that it's a crowd of developments in the western side ever since the highway started to exist. Let's put it this way, and to be connected to the Western Europe, and that brought a lot of demand, especially on the manufacturing side. I don't share the view at all that it's so critical related to the HR. I think we should have a good look of what's happening in Czech Republic, of what's happening in Hungary and other countries which are still benefiting of very large investments on the manufacturing side. So I still think we have a good position towards that end, and we shouldn't create, panic related to that. Of course, it's not the same situation as it was 10 years ago, but I think any reasonable investor doesn't expect to be 10 years and doesn't want to be. I mean, we all want to progress. And even at the beginning of this year, I've heard complaints on the agent side that there's not so much business as it was last year or 2 years ago. There's not so much demand. What I see actually is a shift of demand from pure logistic demand or speculative type of demand towards manufacturing. So we had a lot of requests at the beginning of this year throughout January and these months as well related to potential investments, but especially in the western side of the country due to the infrastructure availability. So that's the main trigger, obviously.
Do you see a decrease in the margins due to increase in land prices, increase in construction prices, competition, and so on?
I mean, it depends on every player's business model. We are lucky because we always have our land bank available, and we're building it when the prices are reasonable, and we generally don't go into crazy pricing for land because that's killing our business. Yeah, our rents, we cannot play with them that much. Of course, the construction prices we see them in all segments of the industry, and yes, they are increasing, and it's hitting everyone, and it's decreasing our margins, it's eroding it, it's somehow, it's not unlimited growth that we can plan under such circumstances, and it's also the availability of the workforce. Each segment, in office development, there was the workforce, which was the scarcest resource. We have our issues with the prefabs and so on. So everyone has specific issues, but there are issues. And yes, the margins are eroding due to these factors. But we're not directly affected by the price of land. That's for sure, because we planned well ahead. The construction prices, there's nothing we can do.
Okay, Laurentiu, you wanted to pick that up, and then Klaus, maybe I can come to you also on that. So, yep.
I would like to add a bit on the regional cities, as we believed heavily, and we are believing in the regional cities. We can also see the model. We are keeping saying that, and excuse me for those who already heard. We are going towards Poland model from this point of view. As Bucharest, it's less than 30% in the share of GDP, so Bucharest has 28%, and Budapest, for example, has around 60% share in the total GDP of the country. The others, so the main regional cities, are counting for about 30%. So it's a scalable split between Bucharest and the other cities. You'll see in our report that we partnered with Best Jobs, and we've made several studies with them, e-jobs, sorry. The marketing was like crazy there. I mixed up the name. They did a small study, and we will share with you that is in Bucharest in 2018 there were 11,000 jobs on their site. In Brașov, Timișoara, Iași, and Cluj, there were 14,000. So it's a difference, and the regional cities are coming with a bigger pace than Bucharest from this point of view. Second, Iași, speaking about office, Iași, for example, has a vacancy of less than 1%. Cluj has a vacancy less than 5%. So it's a lot of room to grow. Mihai was speaking about vacancy increasing in Bucharest. Also, that means that you have room to expand. So it's a good part and the bad part maybe. We will maybe enter in more details. And I want to end with the fact that we will see transactions in these regional cities this year with the bigger tickets than before. And let's remember that in 2017, it wasn't the best year for office investment market, but still the largest transaction in 2017 was Imo Shan at that moment, Citras, right now 52 million, biggest in Romania. And we will see transaction this year, and we will speak not about 5, 10 millions, we will speak about important figures in regional cities.
Okay, good. And I'll come back to that in a second, actually. But Klaus, construction mentioned, obviously we can see construction. So what's the situation here? We've had sessions before, not actually the one in Bucharest, but recently looking at, when we've been looking at the whole of Europe and then the difference between the sort of lower growth environment that there is currently in the western side of Europe and the much higher growth that you've got here, which is also then leading to higher wage rises and those kinds of things. How's that influencing your part of the business?
Actually, here we also have to divide a bit. Let's touch that construction price itself. Construction is a hard business in Romania, but fortunately, the last 1.5 years, construction prices are increasing, and it was time to be so. The reason, and here we have to split. In infrastructure business, construction prices are more related to resources in matters of material. And here we are speaking about aggregates for concrete, cement and steel, as well as bitumen for asphalt. On the building part, on the building side, it's mainly driven by workforce. So, yes, we have still a lack of workforce in Romania, and I give you only a figure. Nowadays we're estimating 400,000 skilled Romanian construction workers only in Germany. 150,000 only in England, so we're missing 1 million skilled workers in Romania. Can you imagine? So, but fortunately, the last 3-4 months, we feel a clear stop of construction workers leaving the market. So we expect the construction price might stay stable the next 12 to 18 months. Not knowing exactly what is going on in the steel market. But workforce, we feel for sure coming improve for Romania, not only coming workers back from Germany, we will see this the next year. We don't know what is with Brexit, but also the increased construction price leads to increased salaries for workers.
Okay, good. It's interesting. I mean, in the UK, certainly we've been very grateful to have 150,000 Romanian builders, by the way. But there's a lot of discussion at the moment, particularly in the UK as well, about workers returning back to their own countries. Are you beginning to see that here in Romania? Are you seeing workers coming back from the UK specifically?
Thank you. In reality, we don't see any migration back to the roots. The tragedy is that we see a lot of migration still going out. And if it's not London, it will be Frankfurt, it will be Poland again. And that's something that we should all be concerned. Because people don't come back just for the job, they come back for the quality of life. And as David's question, I don't think it was answered from my point of view. I think if the predictability and the government is not stopping and is not stimulating stability in this country, it will have a big problem in all segments. So maybe Lavinia can say something about laws, but recent changes, have closed 3 factories in 1.5 months?
Thank you for mentioning this. Actually, it was on my list. Many of our clients are indeed in the construction field fighting with the labor shortages. The government seems to have heard the voices of them, and as of January 2019, it has been enacted a tax exemption in the construction field, meaning that the workers in the construction field, both production, also architecture, design related, will benefit of a tax reduction, meaning that they will not pay tax on income, health insurance tax, and also there are significant benefits with respect to their contribution to pension. Now in terms of numbers, maybe Klaus can mention better what will be the impact of these tax exemptions, but definitely the government is stating that these measures are being taken in order to fight the black market labor, in order to help the contractors fight the labor shortages, but also they are expecting better offers in the public sector, in the infrastructure sectors from the contractor side.
Only to cover this a bit, this means a Romanian worker, and speaking about workmanship, is since the 1st of January having a salary which is automatically 60% net more than he had before, without more costs for the employer. So this is a huge step. On the other side, we have to see the difference. In Germany, the price per hour for a worker is 45 euros. In Romania is 8 euros. The price, not the salary he gets. So there's still a huge difference, but this sent workers, not the emigrated one, the really sent workers, will see them coming back because they are getting the same money now what they would get in Austria or Germany. British issue is another story, I think, but we feel quite well, and we see in 2019 for construction side much more stability, which means we will have a stable construction price the next 1.5 years.
Okay, good. There was a question, and I'll deal with it just because it's come in, which is particularly on office, the difference between price of office in Poland versus, let's say, Warsaw versus Bucharest. Does it make sense? Is the yield differential enough? What's the view from Sergey and Dimitris on that?
I think Laura partially mentioned this before. There is a big gap, and let's just obviously focus on the prime, very prime assets. So today in Poland, we have yields at historic lows, around 4.75%. So lower than pre-crisis levels. I think here in Bucharest we are at, or the agents want them to be at 7%. But let's say thereabouts. So I don't think this gap is justified. Frankly speaking, there should be a gap for sure, because again the markets are different. Poland is more mature, larger, and much more liquid. But the gap shouldn't be so high. So there is a big difference both in terms of yield as well as value per square meter. You see transactions now in Warsaw again at 5,500, 6,000 euro per square meter even for offices.
Okay, good. Sergey, and what's your view on those?
I mean, I'm not following closely Poland, except from the press. So this is what I hear as well. Basically, I think that the overall expectation in Romania is that the gap between, let's say, Romania or Southeastern Europe and Eastern Europe and then Western Europe is really big, and that the tendency basically is to decrease the yields over time. Probably this is going to happen. When that is going to happen, it's not clear. But the reality is that in these markets you can really do great returns, and with the expectations that the yields will go down over time, it's even a better motivator to invest in this region.
Okay, good. Yeah.
If I may add on the rent levels, and Dimitris, correct me if I'm wrong, we are quite similar, Bucharest with Poland. So the average for the premium properties we did, it's 18.5 in Warsaw and 18 in Bucharest, the average I mean for the premium, and it's 14.5 in Bucharest, 14 in Bucharest and 14.5 in Warsaw. So it's, in my opinion, it's not such a big difference. I don't know if it's totally different.
There is some difference, yes. I mean, in Warsaw, like if you look at prime offices there, we're now talking about 21, 22 euros. So if you compare, the best of office product in Bucharest versus Warsaw, there is a, €3 difference, sometimes even higher. But in terms of the range between, yes, I mean, in Warsaw you can find, in the so-called Mordor or Mokotov area, rents as low as 10 or 11 euros. I guess similar here if you go to the outer Pipera area as well. So there are some big discrepancies, and again, when people, investors or other market participants analyze office markets in this region, especially in Bucharest and in Warsaw, they should really do a micro analysis of each location, because there are some big differences.
Do you see Mokotov now as an opportunity? Sorry for diverting.
Are you asking us as Globalworth or generally speaking? Listen. It's beginning to, let's say, there is some, let's say, increased interest. I mean, Mokotov, again, maybe not everyone is familiar with this area in Warsaw. It was the first, let's say, office district that was developed in Warsaw almost now 20 years ago. This was due to the fact that basically historically in the Warsaw CBD, it was very difficult to get to have access to land plots and to develop office buildings. Unfortunately, that district, again, very similar to the outer Pipera area here in Bucharest, suffers from a chronic lack of infrastructure. There's no metro, so there's poor tram connection and the like. So there was an overbuilt over the years, which has basically caused the market over there to really suffer. So I think we're still just to come back to your question, a little further away from basically this area re-emerging. But from an investment point of view, as let's say the prime product in Warsaw has dropped at such historic low levels, as I said before, below 5%, 4.75, 4.5. Investors who are seeking high yields, they will probably start looking at it again in the short to medium term.
Okay, good, Robert.
Would you rather buy prime Krakow for 6.75? A market and a city which is much smaller than Bucharest, and I suspect it's geared on BPOs, or would you buy at a similar yield level, or let's call it a 7%? I'm looking at Dimitris because he's playing in both markets. So similar yield level, Bucharest, 6th largest city in the EU, and a much more diversified tenant base.
Again, just to start with a disclaimer in every answer I give, it doesn't matter. I mean, the answers I give concern ourselves. So it doesn't mean that whatever other investors are doing is wrong. Every investor have their own philosophy, and they have their own cost of capital and investment mandate. So as far as we are concerned, to answer your question, we are, let's say, firmly a value add and sometimes even opportunistic investor. So we have had a number of debates with all agents in this market, whether I should be investing at 7.5 or 8% in Krakow versus 8% in Cluj or Timișoara, and I would choose Krakow. Krakow is a 1 million population. The leasing market in Krakow last year was bigger than Madrid and Milan. the dynamics are very different. The liquidity is very different. Again, I share everyone's views about the growth potential of the Romanian regional cities, and we firmly believe in that. But it's all about pricing.
May I insist a little bit? You only have two options, and it's not Krakow versus Dumitrache, it's Krakow versus Bucharest, same year. Which asset would you buy?
Again, it's a very generic question. Depends on the asset, depends on the location. Same yield.
And the yields are the same. But Bucharest is even higher for prime.
At 7%. Krakow versus Bucharest. If I were given the option, I would say none. But anyway. No, but if I had a gun against my head, I would go for if I had to invest, I would go for Bucharest, of course, yeah, because it's a capital city.
You finished, Robert, yes. Glad with the answer, yes.
Good. Let's quickly pick up on some of the bigger trends that were picked up in some of our other events. One of those was the influence of livability, walkability, those kind of softer factors in terms of both the demand from tenants but also from investors. Maybe Klaus, for you, how much are you beginning to look at that, particularly in terms of construction and design and thinking about those things? And from anybody else, how important are those from you from an investment perspective or a client perspective?
Yeah, actually, I think this market is very much driven from the still high demand in general, high demand on apartments, high demand on a minimum level office place. Still a high demand in Bucharest in comparison to other cities in Europe. On the other side, we will be and we are and we will be very limited on lack of infrastructure. So the big question nobody can answer, how this will move together. Since years we are crying that we need highways. We as company are building highways, and I don't open this Pandora box why we don't have more, but there is a serious reason. What we are seeing coming, and actually we as constructor with our development company, we are starting to invest in hotel business in Romania, especially in Bucharest. So when we are touching this, yes, there is a big demand, not only on office or residential, is a big demand on a hotel for business. And we have the first, we make the first steps. We call it still medical care, but we are speaking about spa and leisure issues. And this is what we are focusing in. Here is coming more or less the trend from Central Europe, not from Eastern Europe. But a special trend we see is Bucharest and hotels, and all over the country a mix between medical care and leisure spa.
Okay, good, yeah.
No, I mean, it's a very good question. It's, again, there is a seismic shift, I think, in the overall global industry. I would say, obviously, everything starts from the US and comes here in Europe. I mean, we are on our side. We are firm believers that this is the key differentiating factor for landlords going forward in terms of having a successful investment product, especially as we discussed before. Given the workforce dynamics. So, you know, since it is very easy now for employees to move around jobs because there is such high demand, the main differentiating factor that an employer can provide is the working stroke living conditions in the workplace. So we ourselves, we invest a lot of time and money in this respect, starting from again, green and is just a now granted given. This is like, you know, it's a commodity. Now we're talking about, you know, technology, proper technology, applications, concierge services. Of course, co-working is a very, very big trend. And as far as we are concerned, because now we have a very large portfolio. It's about 1 million square meters between the two markets, creating this sense of community, and basically, especially the millennial workforce, feeling that they can interact and they can connect not only with their colleagues in the same office, but also with their colleagues in the same building. So this is for us a very big area of focus.
And does anybody see any concerns? One of the concerns raised particularly in London, but also in New York last week, was about the co-working phenomenon, the number of businesses that have been set up and that not all of them can probably continue, and the exposure that both of those markets, London and New York, have particularly to WeWork. The argument from the sort of WeWork side of it was that in a downturn, actually, where are you going to work? You're going to work in a serviced office, in essence. But does anybody else have a view on that, whether or not there's a potential issue with that? And also it'd be interesting to see how far that's moved into this particular market in Bucharest. Is it something that you're expecting to see growing?
It's something else. From constructors' point of view, we have still a high potential to look on other things. Especially on Bucharest market, we are very amazed that investors are still not investing in autark energy systems. So when we are looking on Bucharest market, we have still a high potential to make these buildings much more smart. We have no smart building in Bucharest, I can tell you. We are building these things, so till today we have no smart building in Bucharest in comparison to a smart building in Berlin or in London. Then the next thing is energy, long-term view on energy costs, and I think then will come the trend of this WeWork and so on. I feel the first move will be to really very smart things and energy.
David, yeah.
I told you yesterday that I don't understand this co-working. It's beyond me, but in fact it's working at the moment. I think that the first test will be the next crisis that everybody is talking about. So we'll see what happens with this. But I think that all of this discussion leads us also to something which was not discussed until now here in this forum, is the residential for rent. Because I think that if you look at the young generation, the millennials, as we discussed, they are looking for a very flexible life in general, sharing everything and being able to move from one point to another, like this, one day working in Bucharest, the next day working in Warsaw, Amsterdam, or Cluj. And I think that that this area of resi for rent will grow. You need to look also at the urbanization of big cities and the move from the countryside to the big cities all over the world, especially in Europe. So I think that if you look now in Poland, you see a big move towards residential for rent. I think it will spread all over the region, also in Romania in the next years, and this is something to think about.
And one of the interesting points actually is that a lot of the funds that we've seen being set up recently as pan-European ones are coming under a sort of heading of living, which is then covering everything from student housing through essentially to senior living and healthcare almost, that anything that touches you in terms of a room that people live in essence, and covers all of that rather than just a particular fund focused on student housing or on senior living. And that's just quite an interesting trend that seems to have been picked. There were a number of pan-European funds launched just before Christmas, actually. Sorry, Sergey, you wanted to pick that up.
I wanted to say a few words on the previous topic. I don't know if it's, let's say, relevant, Obviously, co-working is one of the big trends at the moment, interesting trends, maybe a disruptor, let's say. What's really interesting to see is how good this will turn out for the capital markets or for the stock exchange that is financing this. Will these companies be able to pay their rents because they're signing at really high rents for a really long period? So it will be really interesting to see how these companies are going to sustain their business model over time. A big question mark is also for the landlords or for the owners. Is it good for them to have co-working in their offices or their office buildings? Does it give flexibility? Is it a flexibility for the tenants, or is it a competitor to the landlord? It's a big question mark. Then for the tenants themselves, can they brand a co-working space? Can they create a corporate culture in a co-working space which looks alike everywhere? So from one point of view, you can move people from this office to the other office very quickly. On the one hand, on the other hand, you can lose an employee from this desk to that desk very easily because it's just a co-working space and the brand of the company the IT guy works for, they don't know what it is anyway. So from that point of view, it's a really, really interesting topic. Obviously, they're very aggressive. They're coming to Bucharest. They will probably do the same things that they do in the UK and in the US. And it will be really, really interesting to see the co-working, how it will turn out as a business, prop tech, and let's say many other things that are hopefully changing the industry, which has not changed actually for many, many years. So now, interesting times lie ahead.
Okay, good. I mean, and one of the things that actually came up, which we haven't tackled here so much, but in terms of where do you see the next risk coming from? In nearly all of the sessions we've had, people have agreed that we're sort of at the top of the cycle, somewhere around there, and that there doesn't appear to be anything in terms of interest rate risk necessarily. There's a number of risks around, but nothing that is going to create the same sort of issues that there were in 2007, 2008. Aside from in New York, actually, there was concern expressed there, which was about the technology companies and how many of those were, because of the high valuations in the stock market, you know, whether there could be an issue that came from that. So that was a warning that came from New York, interestingly. One of the things to pick up from that, Anna, as well, was certainly when you look at the UK, there's still a high growth in e-commerce and logistics, but it started to begin to tail off, which means that maybe the UK is beginning to get to a more mature state in terms of that market. How's the market here? How much more growth potential is there, particularly from the e-commerce side?
Well, first of all, there's a lot of potential for the e-commerce to grow.
Yeah.
Because we're just picking up with the rest of Europe and actually the rest of the world. I think there's a lot of growth on the logistics side still in the US on the basis of the e-commerce, and I think there's a lot of room globally wise to develop. It's developing differently. There's a change in paradigm of how these buildings are conceived and functioning, and it's that multi-level high bay type of developments. It's different, so it becomes we're far away from that right now, and I think Romania still has a lot to pick up with e-commerce. And unfortunately, we're going back to I think it was a red line in our discussion so far related to everything, to the infrastructure, because I've been discussing with a couple of really big retailers, in Romania. They're actually dominating the market, and their e-commerce has a very small stake of their turnover here because of this difficulty in getting to the consumer. We cannot have e-commerce without having the roads to dispatch the goods. So it's. But we see, in our portfolio, we see a lot of growth throughout the last 3 years. We had a lot of take-up coming from the e-commerce side, and this type of distribution linked to e-commerce, because it was naturally growing. It can explode with a little bit of more infrastructure.
I may add, yes, we have the launch of the report, as I've told you, so I have a lot of figures in my head. So in the last 4 years, the e-commerce grew in Romania with 25% per year. Yes, we are coming from very low penetration, of course, But in the same time, the whole e-commerce, it's growing heavily in Romania, and in Hungary I saw, so it's 30% per year in the last 4 years. But also the whole retail market grew a lot in Romania, and we believe that it will still grow because we saw important changes in the salary. So we had more than 10% per year increase overall, private and public. We saw in the last also 4 years that retail overall grew in Romania with 10%. So it's a lot of room for logistics to grow.
Okay, good. And how's that impacting the retail side? Obviously, a hugely negative outlook and view.
Interesting point, because in this discussion until now, nobody mentioned shopping malls, retail parks, high street, nothing, and nobody in the panel does retail. I did, but not anymore, and it shows you where we are in this regard, really. The customary retail that we had until now is not even on discussion on these kind of panels, which is a question. What will be the future of this retail?
I mean, it's an interesting point. It came up quite a lot in the sessions that we had, that really if you've got prime dominant shopping centres, those will probably still perform. Anything out of that, unless it's experience or it's very close to the market, so there's convenience, may be more difficult. I don't know what your view is.
Romania, it's a bit different from this point of view. Yes, because it's a mixture of elements. It's the lack of infrastructure. It's the penetration of retail in the small cities. We are seeing in the next 2 years, we are seeing about 500,000 square meters to be developed in Romania in the next 2 years, mainly by NEPI and Prime Capital, but like half of the new stock. But going towards small cities where nobody is. So it's a lot of room. Romania, especially from those cities, are not so used with the online shopping. So I do believe that for the long run, as you mentioned, the very good locations will be very, very strong. In Bucharest, for example, we do not have almost at all the high street. So that's why the malls are benefiting a lot. We do not have a Vațiușca or even other very important streets. So that's why the shopping centers are very, very dominant. So I do believe that, to summarize, the very good location and the locations in which you enter and you are by yourself will be successful for the long run.
Okay, good. Yeah.
Existence of shopping centers, small malls in regional cities, yeah, and also a decrease of population in all cities. How is that going to...
Say again, please, sorry.
How do you answer the concern of appearing, small shopping centers in all secondary cities, regional cities, tier 1, tier 2, tier 3, and also a substantial decrease of population, especially in a big city. So what the malls will do in the next 10 years, when in Râmnicu Vâlcea, Sibiu, you're going to have 3 malls and Târgoviște 2, yeah? And this population will not come to Bucharest, as in the past. If you go to Băneasa shopping center, you will see 3/4 of the cars are from regional cities, from Ploiești and Dâmbovița, yeah? So these people have their own malls in the next 2 years, and the decrease of population will be substantial.
But we are not speaking about malls. So
no,
we are speaking about small
retailers.
schemes and retailers, and I do believe that...
but it will affect both.
Yeah, but we are not speaking about large schemes. So the largest are 29, and we are speaking about 30 tiers. Then, if you are going to let's say, smaller cities, we are speaking about 8,000, 9,000.
With the same retailers, Zara, Inditex.
Yeah, but if they are the only ones there, and it's not another shopping center, I don't believe that if there are 2 shopping centers, for example, in Râmnicu Vâlcea, and another 2 will open.
No, but I think it's enough to absorb the consumption here in the malls.
Yes, in some cities, yes. In others, no.
That's my
No,
point.
but in the same time, for example, in regional cities, second tier, like Cluj-Napoca, Timișoara, Brașov, Iași, will see migration in those cities. So those cities, population
From
will
Serbia,
grow.
maybe.
No, from the others, as you said,
Yeah?
because they are moving towards those cities from other smaller cities. And we will see if the industry, for example, a hot topic is Craiova right now. We shall see if the production of Ford will increase. Maybe also due to Brexit. We shall see what Ford will do. But if that will increase, that will mean new jobs, higher salaries, and a better, for example, infrastructure with Drobeta Turnu Severin, which is a dead city right now. Sorry if it's somebody from... but I do believe that the connection with Craiova will influence a lot cities like that, if a pole is forming. And infrastructure, let's think about, as Dimitris said, Romania it is so far, but in the same time, it's an opportunity for us. So it is so simple. If in 10 years we will have 1,000 kilometers, let's say, we had 200 in the last 2 years, so we are very close. So if we will have that, how Romania will evolve? We had 40% increase in the logistics stock without the infrastructure, with 200 kilometers in 2 years. And 40% in 2 years, the stock of industrial increased from 3 million to 4.5 without any investment, I may say, in infrastructure. If we will have that, I do believe that some cities will develop.
I think that the young generation today is moving towards the online, and offline is really becoming negligible to them. And in my view, all the small shopping malls of 30, even 40,000 square meter, doesn't matter where they are, they will disappear. In the smaller cities, there will be one, maybe, left, and they will turn into something else. This is maybe an opportunity to the logistic guys, or to co-working, or to, I don't know, hospitals, whatever. You miss a lot of hospitals in Romania, so maybe you can turn them into hospitals. But I don't see a big upside in the retail. I mean, the big shopping malls will survive and will do good, the dominant ones, but the smaller ones will disappear somehow.
Just quickly, because I know we're running up against time now. Just in terms of capital coming into, particularly into Romania and the region, are we seeing any new types of capital coming in? What are we seeing in terms of domestic capital? Are we seeing Hungarian REITs investing here? What are we seeing? Maybe first with you, and then Lavinia, it would be good to pick up with you what you're seeing from a client side as well.
So it's an interesting trend. I was looking in the last 3 years on what has been grown in the whole region. And in the past was South Africans. Right now we have seen that the CEE domestic capitals, so investing in your country, in 2016 it was 19%, 2017 was close to 20, last year was 25%. Cross-border CEE, as you mentioned, we do not have yet the Hungarian REITs here, but we have some Czech investment funds. So Czech and Slovakia were pretty active in the region. We started 2016 with 2%. So CEE investing abroad, and we had 7% last year and 8% 2017. So it's starting to emerge. Romania, for example, we missed a lot local investors, like domestic ones, and it happened last year with Dedeman. It was a very important transaction, the sale of the bridge, the largest if we take into account also the third phase, close to 200 million. So I see newcomers from this point of view. And also we have right now some products on the market, and irrespective, I was concerned about the impact of the last, let's say, the last changes in the laws with the ordinance and so on. But I'm seeing a lot of attraction here from others also, which are not present in Romania. So I have a good vibe right now, speaking on actually on what I'm seeing as an interest for the products we have on the market.
Okay, good.
Thank you. Actually, I can confirm the trends that Laurentiu is reporting, indeed, we can see CEE Capital here. In addition to the names that you have mentioned, I will say also capital from Israel. It's more and more present. It used to be, but it's picking up again. As you mentioned, the Dedeman transaction actually is the first time when we have seen a domestic player looking towards a core strategy, which is very interesting. I would say that the Western European capital remains underrepresented in Romania, although there are institutional players that are looking towards Romania. They didn't manage to transact, so still private equity is the one that drove transactions here. I would mention a little bit about the product availability in the market, because the panel speakers here can confirm that we have in the market long-term holders, which brought a little bit of lack of availability product, which means that we were unable to attract massive investment. So from this point of view, this is the situation now. However, there are core products in the market. We see a gap in pricing. Currently, there are some mandates, and there is, on the seller side, an aggregation strategy, and we are interested to see how the investors will react to this.
Okay, good. Yeah. I just want to make a comment on the domestic capital. It's, yes, by nationality, it is correct. But if and this is not just in Romania, I think in the broader region, if we want to see a real game changer, we should really see institutional domestic capital, meaning pension funds and REITs. I don't think players like Dedeman will change the market locally, or similar players in Poland or in Hungary. So unless there are changes in domestic legislation across the region to encourage, pure, let's say, institutional players like pension funds, and allow the establishment and the development of REITs, we cannot really talk about, substantial, substantial domestic demand.
I concur with you, because there are some legal restrictions. I mean, there are legal restrictions in terms of capital investments from pension funds. So institutional local players cannot really invest in real estate. And I understand this is a difference that is being reported by some of our clients. I understand that in Czech Republic, 1/3 of the investments is represented by institutional local players.
So we've talked about a lot of positive trend. Clearly, there's a lot of capital entering the market right now. It's simply because of lack of product elsewhere. But what we've not talked about, the decline, we've not talked about potential recession or any correction happening in the market. Back in 2008, when the market we saw blood in the streets across most of the world. In Romania, everybody was still running around celebrating. Brokers were still celebrating of their fees. And the money came in 2009, 2010, and that's where we really saw the impact. Most of you guys are running businesses. What are you looking at? Are you already looking now at some sort of risk metrics? Are you looking at action plans to basically handle a slight decline in the economy? How are you gearing up for this?
I guess ourselves as an investor, I mean, this is how we are basically. This is our investment philosophy is both aggressive and defensive at the same time. So we're aggressive in terms of expansions, acquisitions, and growth. But in terms of the type of product we buy, it is very defensive. So we focus on very well located assets with long-term sustainable cash flows from tenants. So just to take a step back, Ulrika, my own view is that I don't believe there will be, you know, a crash or a crash similar to what happened, you know, 10 years ago. Yes, of course, it's a cycle. So we'll see a downturn. So, in my view, players that have, you know, sustainable cash flows, very well located assets, and low leverage, will not face any issues, and that's firmly our strategy.
Okay, good. Did anybody else want to pick that up? If not, that's also fine. But
No, look, we're kind of the same breed, so we have good product. We're trying to keep it at the lowest speculative level, so I think we are prepared for both for good and for worst. I'm a risk manager by by nature, so this will have an impact on how we structure everything locally as well. But of course, once being through the game and through the period between 2007 and 2013, I think our group has learned all the possible lessons, and it's more than prepared and cautious for anything, but not necessarily for this year or next year, but any time, because you know, that's why it's a crisis, because actually we're in nature, we're not expecting it. If we are all expecting it, then it's not a crisis anymore.
Let me also add something, because here we are in Romania, and there is a very, very big difference between 2008 and today in the local market, and people shouldn't forget that. In 2007, it was a credit-fueled bubble, obviously globally, but especially here in Romania. Now the Romanian economy has a lot of substance. I mean, you have all these multinationals that have come to the market. They will not suddenly, you know, pack the bags and leave when there is an economic downturn. So the substance and the economic fundamentals are completely different.
The banks are healthier.
Sorry?
The banks are
of course, everything.
Healthier,
so
yeah,
that's why I'm saying, you know, I'm not concerned about, you know, a similar 2008 style, you know, crisis.
Quick question. I jumped out to because I may have missed this in case if it was covered. The gap between yields in Budapest, Warsaw and Prague is obviously, people say that there's a big difference and a difference which is not reflecting the risk return of Romania versus, or Bucharest versus Warsaw. I'm interested to know what the investors in the room think actually is the appropriate gap between Warsaw and Bucharest, and when we get to that point, that would be deemed to be the point at which we're at a sustainable level and it's corrected. Because as far as I'm concerned today, the 250 to 300 basis points doesn't really reflect the difference in risk and return between the two markets or the three markets. Or even if you look at Budapest, which is going
Very shortly, yes, we are constructors, but especially in Central Europe, Austria, Germany, we are also huge investors. We are investing also a lot in Poland and Czech Republic, but this is not because it's more safe than Romania, because it's different. So I think there is not mathematical formula to say why Bucharest is different to Krakow or Warsaw. It's because of the region, it's because of mentality, it's because of place to be. For us, it's now starting Bucharest to be interested. We didn't do any investment the last 20 years, where we did investments in Poland a lot. Now we are starting in Bucharest. Not because it's more safe, not because there is now the opportunity and still a high demand. From our point of view, there is no formula to say when Bucharest would reach. Warsaw will never reach, because it's a total different mentality and a total different place on the earth.
Where do you think the opportunities are at the moment in this market?
Obviously, as a lawyer, I would say to our panelists here, please invest in Romania. So this is the opportunity. We are seeing definitely the logistics sector growing a lot. So we feel that there is a lot of potential in this segment. We see in the office segment, we see the market is getting there. So there is an interest in the office, definitely, but I think Bucharest is the place. I'm a fan of Cluj and Timișoara as well, so I will promote investment also in these cities, because for the first time we feel that these cities are competing with Bucharest, not only in terms of sophistication and so on, but in terms of size of the projects, and in terms of the fact that we see, for example, in Cluj and Timișoara, some mixed-use projects that are really challenging Bucharest in terms of how they look, what they offer, resi, office, and retail. So I would suggest, I would see for Romania these three major cities as a place for investment: Bucharest, Timișoara, and Cluj.
Okay, Dimitris.
I'll keep it under 10 seconds, so I don't think this will come as a shock. Offices and logistics, where we're active in both countries, Poland and Romania.
I will speak just about Romania. I will go for the dominant shopping center, Afi or Băneasa, if there are not so issues with the legal issues at Băneasa. Second, I will go for office in Bucharest or Cluj, but it is a lack of product on industrial. I would go with.
Okay, Sergey.
I mean, I see a lot of potential in development. Yes, office and logistics seem very attractive, but I think the big difference that I see to some of the smaller markets is that there is really big available land in Bucharest, and it allows to create really nice mixed-use projects. And I think it creates an atmosphere and it creates a difference in this city, and I think there is great potential in this, because mixed-use projects, they create new neighborhoods, new environment, and I think they add a lot to the city in which they're developed.
Okay, good. Klaus.
Thank you. I want to underline mixed-use products are missing in Bucharest. Look ahead to get some investment in these products.
Well, where I would invest myself, or
well, you can answer it either way.
We're
either way.
obviously committed to the light industrial and logistic market. So CTP. Personally, I like a lot the office market, and I think there's a lot of potential, and I would put my own money into office in Bucharest if it has the right fundamentals.
David.
Offices in Romania and resi for rent.
And if you could join me in thanking yourselves and the speakers, that would be great. Thank you.